We may need to reschedule tomorrow's live stream just so we could maybe even watch the new Roaring Kitty one that's about to drop. Markets seem like they're very excited. They got that hit that notification bell. You should probably do that for Money Never Sleeps as well. By the way, this is today on Money Never Sleeps. Welcome back to Money Never Sleeps. It is a big day indeed. We got rate cuts across several central banks now. We got some live streams that are coming out that are absolutely getting retail super excited. And what else do we got? We got some stock splits that are coming up soon too. So there's a lot that's going on right now. I'm very excited because I think this is a great setup. House, thanks for being here today. Before we get into anything, just want to say nothing we say is financial advice. A couple of guys just like to about the markets. If you want to talk financial advice, you should probably do that with your own financial advisor, right? That's why they get paid the big bucks. Nothing we say, just don't take it to heart. We're just giving our opinions. So that said and out of the way, where should we start today, man? There's a lot of big news across the board, and it impacts every single aspect of the market, from central banks to institutions to retail. I mean, we could really go from anywhere at this point.
Let's start with central banks. I feel like I wouldn't say it's the biggest, but it's got a historical precedent. Been 5 years in the waiting.
Yeah, man. And see, that's the part that scares me. That exactly what you said, because it's also the headline of this NBC or CNBC article that's pulled up here. European Central Bank cuts interest rates for the first time since 2019. What happened right after 2019?
COVID.
Yep. And what was happening right before COVID? I probably shouldn't have said that 2 minutes into the video, but it was a lot of the banks across the world were failing. We were seeing tons of pain in the banking sector. Again, just poor decisions from cycle to cycle. We saw that a lot of mergers were happening. And now we're seeing, once again, when we know the banks are absolutely stressed to the max, rate cuts once again. So I think we talked a little bit about this yesterday. This is kind of bullish in the minds of investors, I think, in the short term, right? I think a lot of people are very excited to see that these rate cuts are happening. But if we were listening to some of what Christine Lagarde had to say today, it seems kind of muddy their vision of why they're cutting rates, right? They're saying that we are seeing employment slow down, the labor market's starting to finally cool off. But we do anticipate inflation to be a problematic and increasing in the next year or so. So then why are you cutting rates? It's very possible that since the last meeting, something is broken that we don't know in the system. And this is a necessary fix, at least to take some heat off of the market. That would be my assumption. But it doesn't seem like it's a wise decision. And it's something that we're going to have to ask if the Fed's going to do the same thing. If inflation continues to be problematic, why are we cutting rates now? Is it because we know that the outcome is going to absolutely tamper the inflation issue, which I think it will? Or is it because, maybe the labor market is really cooling off and we're getting to a point where we could get this soft landing, maybe a little bit of a pullback in the market, but not necessarily anything that we were anticipating similar to like 2000 or 2008, right?
Yeah, I think one thing that's kind of important to point out is there was only one member of the ECB who didn't back the rate cut, and it was Austria. So, and I think one thing that's important to point out, right, is European central banks in charge of 20 countries, whereas most central banks that aren't in alliances, right, it's just governing their own country. So, I think this kind of stands maybe Austria is kind of carrying our mindset where things could potentially get ugly, whereas they gotta balance out the entire European economy minus Great Britain and a few others, right? So yeah, I think it's a bit of a mystery. You can't really point out looking at this data directly which countries are struggling, but you look deeper, not Europe's not in a great spot. We'll just put it that way. with a lot of their countries. So I think it's exactly like you said it. It's try and get some money back in, try and get some risk on, so money can flow through the markets. But I don't know, man. I don't see a 25 basis point cut really striking up the guns. So maybe if we get to that 2026 kind of aim of 1.752%, I think that's going to need to come sooner rather than later. Otherwise, I don't know if they're going to get the exact reaction they're looking for.
I completely agree. It's there's a lot of things that are really problematic here, right? We also saw that Denmark, their central bank, also cut rates today too. So that's again, we're starting to see central banks. It's three now, this in 2 days that have cut rates. I do know that the economy, massive economy, absolutely in shambles, despite whatever the DAX is doing in their equity market. We know Sweden's in a really bad place. Finland's also in a fairly bad place. All those Nokia phones that you fooled me about.
Finland isn't real. Finland does not exist. Not serious. It's just a meme.
Yeah, well, you fooled me that night. I can't believe I fell for that. That's the best part too. I was like, House doesn't joke often, and I didn't expect him to pull that one on me. So I was like, is there something that happened that I didn't know? Like, is there something treaty? Am I just like being stupid? But
yeah, so I guess to fill in anyone who's listening briefly, that's probably very confused. There's an old internet Reddit thread about some kid who grew up and his parents were convinced Finland wasn't real. And honestly, the argument isn't bad as far as conspiracy theories go. So if you're interested in figuring that out, just look it up. But we'll keep going with regularly scheduled programming.
Absolutely. But as I was saying, like a lot of these countries in the European that under the central bank of Europe obviously are in a lot of pain. Italy's also another one that's in a lot of pain as well. We continue to see manufacturing and all these layoffs, and just we're not seeing the numbers that we saw right after 2020, 2021 when everything had a really good bounce. The problem also is what's going to be what's going to be the fallout of this too. And it's very similar to, I think, what kind of happens in times of, extreme financial distress. You do see kind of some type of conflict erupt outside of your nation, right? And it's kind of the thing that ends up being what takes over. So I think it's really problematic right now seeing the European Central Bank do this, and they're afraid of inflation being problematic, but they're still cutting. Tells me that they probably think that whatever's coming is probably going to tamper that inflation. It's going to bring it down because maybe people are just out of work. There's not going to be as much money circulating. So then a lot of these, corporations are going to end up having to find these retail consumers and price accordingly, and that'll bring inflation down over time. My question is, does anything happen in Europe? Obviously we know that there's a war going on. Could anything like that cause this fall to happen a lot faster and a lot quicker? It's very possible, right? And I think the dollar itself, and it's very similar to the Canadian dollar. A lot of people are talking about those potentially being dumped. And like we're going to see a lot of pain in those forex markets. I wouldn't be surprised. Something happens in Europe with along the lines of obviously NATO and the European Union with Ukraine and Russia. It's very possible that you could see a lot of pain. They might be cutting back to zero as fast as they can, the ECB, just to get some money back in the system. So it's going to be very interesting to see how that plays out. Again, that's the worst case scenario, but I do think that they have the foresight to know that inflation being a problem and still cutting rates, likely inflation is not going to be as much of a problem as people think it will be in the next year or so.
Yeah, no, I think that's a good way to round it off on where you want to head next.
Yeah, let's where should we talk about NVIDIA?
Let's do it.
Because NVIDIA is it's the talk of the town right now. It was having a little bit of a red day today, but nonetheless, I think everyone right now is kind of holding on to NVIDIA because I believe if they hold today into tomorrow, they get the stock split, and I think that starts trading next week. I think if I read that right today, where next week you get 10 shares to one, brings the price down to roughly $120 or so a share. I think market capitalization is going to be the most important thing here for retail that's going to be excited to buy in to understand, because just because it's going down in price doesn't mean that it's going to be able to go to $1,000 once again. You would need a lot of money to come in. So I think that's the one thing that's not being broadcasted very well on, like, say, Bloomberg or CNBC, because they're just pretty much saying, yeah, it's going to be $120 a share. People are getting excited, and we don't know what's going to happen, if it's going to lead to a sell off a little bit, or if it's going to lead to a bit of a squeeze.
Yeah, I mean, I think that's the question, right? Is like market cap reached all-time high yesterday, cracking 3 trillion, pulled back a little bit today ahead of his stock split, right? So I think the mind going into today's trading day is, okay, we just hit all-time high market cap. Let's shed a little bit, realize some gains, because it's that uncertainty of what's going to come, right? Is there a crowd of people, retail, that's been priced out, ever since it crossed 800, from 600 all the way up to above 1,000, right? Is this the time where they're like, hey, we're getting that FOMO. We were trying to get some NVIDIA, and every time we went to buy, it was up another $100. Right. So maybe there's that, just kind of the not only portfolio diversification, but just wanting to add something that's been winning lately. Right. So I can see that. But then there's also that, hey, now this $1,000 is split up into 10 pieces. So let me sell half of this, right? Because I'm not getting rid of the whole thing. I now have a lot more shares. So I think there's definitely a lot of different game theory you can apply here. So definitely something to keep an eye on. NVIDIA has far and away been the leader probably over the past, I'd say, 3 years, right? Like if you look at the time lapse chart of NVIDIA's market cap growth from 2010 to present, when you get into the last 3-4 years, you're just staring at that chart like, holy shit, So yeah, I think it's going to be an interesting Monday for sure.
100%. And that's, I mean, you saying that right at the end, there's a couple of charts that remind me of that. One of them also starts with an N, Enron. Maybe there's an E before that N. Who knows? Yeah, I know. But when you say it real quick, Enron, NVIDIA,
Yeah,
it's a little joke, man. But yeah, I mean, smartest guys in the room got that chart to look like that in a matter of 3 years after trading.
That Jensen didn't sign your chest? Is that what's going on here?
Are we comparing Jensen to Liu Peng, the guy who married the stripper, sold half his shares, and didn't go to jail? I don't know, man. I'm just saying it. Obviously, I'm not saying that NVIDIA is Enron, right? But I'm saying that there are similarities between the charts.
Oh, yeah.
I think that's fair. That's fair to say. But with a stock that big and we're that close to seeing it become the biggest company in the world, I think it's very possible that we can get there, right? Microsoft, I think, could be taken over by the June OPEX. It's the stock split could just usher in a fast wave of cash. And I think that's kind of the theme of today's show. There's a lot of things that are happening this month, all of a sudden out of nowhere, that should kind of get a little bit more money in at the top, where we're talking about that distribution, right? 10-to-1 stock split. You're gonna see some retail investors buy a couple, $100 worth of NVIDIA, most likely. Mm-hmm. You're seeing rate cuts across the board. Should get people who are trying to front run everything excited if they think that we're not gonna have any pain in the system. And then the next thing we can go into, obviously, after this is GameStop. I kind of said yesterday that, do you want retail back in the game? Push GameStop up, push Bitcoin up. NVIDIA's stock split, rate cuts. I mean, it's kind of the perfect storm to get, the last bit of liquidity into the market. Speaking of which, let's just go right into GameStop at this point, because I haven't seen it since they halted the trading, but I do want to show this tweet. This is from Zero Hedge. It's kind of the reason why GameStop shot up 33% today. It's because he's got a live stream tomorrow, guys. First one in how many years? Since 2021, I would assume.
Probably, yeah. It's got to be since pre-congressional hearings.
Damn, it's we have to assume there will be chicken tendies. We have to assume there will be red headbands. As for anything else,
I almost want to try and create like a drinking game around it, but I feel like his catchphrases from the congressional testimony aren't going to be the same, because my thought is like, I just want to play a drinking game where every time he says, I like the stock, I drink, right? But like, is that still going to be his one-liner? I don't know.
We have no idea, right? It's and again, what happens if it's Gary Gensler that shows up on the stream, right? I'm just kidding. It's I'm joking, Gary.
Everyone's been waiting for Roaring Kitty head-to-head with Gary Gensler.
They have a drinking game together, and they just watch the stock go back and forth as they talk on the live stream. That's so that'd be so meta. I would love to see that. But jokes aside, I believe his calls expire tomorrow, if I'm not mistaken, right? I think that huge position he
I
had,
think it could
those
be, yeah.
I think it's tomorrow because I know JWeb also just tweeted that GME has earnings on Tuesday. Who knows what happens here? I honestly, like, you're not going to have that many calls and not, take advantage of it since you're up. I don't know how much percentage right now. Let me pull it up on TradingView, but I saw it was up to like 40 something dollar. I just pulled up Twitter again. I'm stupid. Oh shit, something else just happened too. Oh, maybe for tomorrow's show. Let me pull GME, but it was like this morning I was looking at it. I'm like, okay, all right, it's shooting up. It's at 30, and then out of nowhere, it's up at right now. It's about 39. Great, see this, but as soon as you shared that live stream, price shot up insane, and then they halted it like right then and there. So it got to about $44 a share, and I remember he tweeted again Sunday night, right? It would have been like right here. So obviously he could have gotten out at 40. He could have gotten out at 44. If he was buying Friday, he got in at 23, which where it was bottoming in that bottom of that round area. If this price doesn't shoot up, if it doesn't go up higher, then there's a good chance that he's probably taking profit or he will take profit. I just can't see him letting those contracts expire worthless. That's just stupid, right? You're in the money at this point right now. Despite whatever happens in this earnings call, you're probably going to see GameStop earnings. I don't know. Maybe they're a little bit better. Who knows? I really don't.
I just saw a comment from JWeb on Twitter. He said he doesn't think they expire until the 21st. So we still got 2 more weeks out.
If that's the case, then this is the perfect storm for retail to come in, and this is also the perfect storm right here to see literally what we saw back in 2021. Then, I mean, this is the chart. Maybe we come down, and then right when we get to that OPEX double top, it's very possible we could get to these levels. I mean, look where we are right now, right? Double top, maybe we get to about $65, maybe $70 or so. I think that's very possible. But that's also kind of scary too, right? Because that means a lot of people are going to get sucked into this. And we know that institutions are on the long side now. They're not on the short side of this GameStop trade. They got out when they halted trading. That way, limit down, kept on selling every time they halted. Probably close their position, maybe at a little bit of a loss. Now they're in on it. And if he continues to ride with them, I mean, I could see this definitely shoot up. Same thing as I could see NVIDIA shooting up after the stock split, and I could see Bitcoin shooting up from here too. I think this might be the perfect trap for to get the last bit of liquidity in the system. Is everything that needed to happen is absolutely happening right now, and that's kind of scary. Because I mean, everyone's making a lot of money when they see these candles going straight up. It's like, well, I got to get in on it too. So I'm going to be very interested to see that live stream tomorrow. I don't know what time it starts. You can check it out and pull it up right here. Looks like it starts in 21 hours at 11 a.m. my time. So we'll be able to talk a little bit about it on the show. Yeah,
Okay.
It should be fun. I think it's going to be fun. I'm sure it's going to be volatile as shit for GameStop as he's talking. I mean, it's probably going to be more volatile for GameStop and AMC and all that stuff than Powell when he speaks during a presser, when he says the same damn thing every 12 months. But that's all I got on GameStop. Let's talk about, let's just cover initial jobless claims right now. Initial jobless claims are up 229,000, up 9,000 from expectations. Another bad labor data point. This is the week of just shit data for the labor market, and it's showing you that there is absolutely weakness in the market. I think it's not gullible or foolish to say that we're probably going to see unemployment rise significantly from here. I think tomorrow we'll probably see a print close, if not above 4% for unemployment. What is unemployment right now? Is it at 3.8 or something like that?
Yeah, I think it was nearing its way up to 4%. I think that sounds about right.
Yeah, I remember it went up and then it went down the month after. So I think it's at like 3.8% right now. I think it's very possible we could get to 4%. I think they're
3.9%. It's up 3.9 from 3.8.
Oh, okay, wonderful. Yeah, I think it's very plausible to say that it's going to be at 4% tomorrow. So I'm not saying don't go to Vegas, don't make any bets or anything like that. I'm just saying that I think it's a good chance with all the layoffs that we've seen in this month and all the labor data finally starting to cool. It's a good chance we'll see that. But outside of that, we'll get that information tomorrow and we'll cover it along with the Roaring Kitty stuff. Let's talk about crypto right now because It's another one that I think is going to ride here until the 21st at least. I think we're definitely going to see all-time highs fairly soon for Bitcoin. I don't know about the alts. I don't know if Bitcoin's dominance itself will keep alts from going to all-time highs, but I definitely do think that we are going to see us push to that historical trend line in that kind of bear flag that we are watching on the macro. And again, that's monthly. But let's pull up Bitcoin right now, and then what are your thoughts on price action? What's the next move for Bitcoin over the weekend? I know you were talking about potentially seeing a volatile day come Monday. I don't even have, oh, here
Mm-hmm.
it is. And
I
I'm
mean,
not
looking
disagreeing
at
with you one bit.
looking at where we're at, I mean, I've been looking at the CoinGlass liquidations map, and just looking at where everyone's at on exchanges, right? Because that's where a majority of people are going to be doing their trading. I don't think most people are psycho enough like me to just trade on dexes and eat all the
Right.
fees. So I mean, looking at Bitcoin on the 7-day liquidation map, it looks like there's a chance we could go down, and then maybe Monday we fire up. So right now, sitting around 71K, there's about $1 billion worth of notional volume if we just go down to 70K flat. That's cumulative long leverage going to get liquidated. And, that number for shorts to get liquidated, to get that equivalent number, we're going to need to move 2K up to about nearing 73. So, I think if I was going to go just off of the liquidation chart and see if anyone's going to try and squeeze some money, I think we're going to go down a little bit, and then we're just going to go up Monday. But what are the words I'm looking for? I'm not gonna be disappointed if that doesn't happen, right? Like, because I think ultimately we're gonna move up. So if we go down first, it's like cool. I'll get a fresh entry on some longs. If not, no worries, and maybe we see some small downward moves Monday, and then a big upward move. But I think just looking at where everyone's positioned, right? There's so many people long right now. Like they got longs all the way down to 63K, and if you go down to that limit, right, there's almost $8 billion worth of cumulative long leverage that stands to get liquidated. And we looked at on shorts, there's only $3 billion all the way up to what's that, almost 80K. So if any market makers are trying to get a quick buck, they're probably going to push price down before it gets set up. But that being said, how are funding rates looking? I've just been looking at this liquidation heat map.
Oh, good, man. They line up literally with what you're saying, and I completely agree 100%. We have a lot of time before June 21st, and if we are going to see Bitcoin's price drop, it's not going to be during TradFi hours, right? There's too much at stake when you see some of that. You're not going to see the ETFs bleed out right now. I think it's going to be somewhat staying stable. I think there's a good chance that we bleed in the weekend when there's no markets open, and then right before markets open on Monday, so say Sunday night, you start to see that pump kind of come back. Markets are green Monday morning, and you kind of leading that way up to the upside. I think it's going to be a short liquidation, very similar to what you're saying. Just wipe out some of that money that's there around 70K, and maybe it's right back up. I think there's still room for like $5,000 or $6,000 move up for Bitcoin. I think that's very, very reasonable. I think it's possible, and that could come in one day, or it could come as a slow grind into the June 21st OPEX, right? And it doesn't have to stop at 76. I mean, it could just get a really fast wick up to like 80 or something like that. And if that's the case, then you're probably going to see a lot of volatility at that top. You might also see these funding rates even get more positive at that point. These funding rates are very red. Everyone is very long. And it's funny because you're also seeing people very long on some of these meme coins as well. But they're not to the level that I would be too concerned about. I think this is plenty for a short liquidation. If we get to that point where it's like 80K and you start seeing these funding rates at like 3%, 4%,
Mm-hmm.
I would be fucking terrified for everyone's positions, pretty much, because you're going to see that the entire market is lopsided, right? And again, and now that OPEX is out of the way, there's no necessarily reason for any of those contracts on the ETFs to be in or out of the money for quite some time. I believe that the next big OPEX after June 21st is actually like September something. Obviously, there's monthly OPEXs, but the next major one, is in September. So it's very possible that we could see that run up, and then people just get caught off sides for maybe July, August OPEXs too. But I'm very interested in seeing how this weekend plays out. I think we're kind of seeing low volume across the entire crypto market, but low volume doesn't mean that price can't push up. It just means that we're playing a different kind of game. It's very similar to how we were playing in November when Binance went under, and then you saw low volume push BNB up absolutely insane to the current levels that we're sitting at right now, right? We've also seen
Mhm.
low volume push Bitcoin from 25,000 to 44,000, I mean 34,000 in one afternoon. So I'm going to pull up just the Bitcoin chart real quick, and then we could wrap it up there. Uh, this is pretty much what we're seeing. We're right here. It's very possible. Come back down. Find some support real quick, get a quick liquidation, and then you can get a quick reversal. You've seen quick reversals in this market tons of times within even this little trading pattern. This is 100% a bull flag. Looks like it's going to push up. It's going to push up higher, in my opinion, than 74,325 if this is a true bull flag, which I think it is. And then you're going to find some resistance likely somewhere up here, right? And then obviously this has been the level of resistance that we're looking at. Once you get to this level, you're going to be extremely overbought on the daily. You'll be at like 100 and probably somewhere in the 80s on the blue stochastic RSI. If you look at the weekly, the weekly's got some room to the upside, so I'll be interested to see how it closes this week. If this moves faster than anticipated, that kind of shows me that there is weakness in this move long term, at least going into the summer. Maybe we push up a lot faster than we anticipate. I don't know if that's the case or not, but again, volume's dying as price is pushing up. That's concerning to me, but again, anything could happen. And then on the monthly, this is probably the most concerning divergence, right? You're extremely overbought in the monthly. Obviously, as the price has been going up, volume has been decreasing significantly. At some point, this is going to catch up with Bitcoin. I just don't know when it is. And maybe it doesn't take us to new lows at 10,000 like I anticipate. I would expect it to break this and test that major level support down here. There's also a CME gap down there, but maybe it just comes down to the 50, right? Maybe it comes down to like 34,000, and that's the worst of it. We don't necessarily know. This could be something that doesn't break for 10 more years. It could be very similar to the S&P's channel that it's been in, this ascending triangle, the NASDAQ's ascending triangle that it's been in for like 18 years at this point. So anything can happen. I do think that we do find resistance at that top channel there, and then maybe people are caught off sides, but a lot of things we need to play out in order for us to see that major pullback to get a really good entry. And again, that's all I'm looking for at this point. I'm looking for a really great entry on Bitcoin and a lot of these other alts. And obviously, if Bitcoin pulls back because of greater market conditions, alts are going to bleed significantly. I don't think alts are going to be, you guys know I'm a Cardano fan. Do I think Cardano's going to hang on to 30 cents, 40 cents? No, I would anticipate that it would come down significantly, probably be one of the first ones to bleed. I'd probably think it'd be coming down to about 8 cents. That's worst case scenario, what I would think for alts. Like there's a lot of them. You just go through these real quick. Cardano, XRP, I would think there's a lot of support right between like 17 and 22 cents. Matic, let's look at that one. Matic, I still think is going to 30 cents. Might have lost that bet. I don't really give a shit. But you keep rolling over with Matic. It's only gonna be a matter of time you lose that 51%, that 51 cents, and then you're gonna start rolling back down, right? It's going to be interesting. I think it's going to be really interesting for alts. And, we don't cover them nearly as much. We can take a look at the total 3 as well. This is very similar. We're starting to roll over, putting in a lower high, unless something happens in the alt market and capital flows into it. I think it's safe to say that this is our wave 1. This is our wave 2. Wave 3 is going to be pretty gnarly coming down. And, obviously, I think wave 5 will get us to either $200 billion market cap or, worst case scenario, $100 billion market cap for alts. Obviously, outside of ETH and Bitcoin, those probably are going to hold up a lot better if that's the case. Last thing I do want to show is just in TradFi is the Treasury market, because I did put it on the thing and I forgot to mention it. But this is the monthly. We don't need that. So look at the daily. The Treasury market is starting to price in rate cuts. You got a bit of a green day today. Who cares? It's 0.09%. That's nothing. But you're starting to see the long end, excuse me, of the Treasury market start to come down, which means people are buying these. And, it's really interesting to see the markets price it in as, Japan and China are offloading a lot of treasuries in order to save their own currencies. even buy gold at that point. So I'm curious to see if this is going to be enough or if there's going to be a major treasury sell off that causes the market's necessity to leave equities and go into this. Maybe that's why we're starting to see these rate cuts or something along those lines, because if some of those yields start to go away and then the greater, broader market conditions start to hit, there's a good chance that people are going to flee to those. So, maybe putting your foot on the gas, taking off some of these, the high yields from these high rates, maybe that pushes them back into the treasury market. Something we're going to want to watch. My assumption is that we're probably going to see the 2-year crash significantly, and it's going to be without warning. And I think that's going to cause the yield curve to uninvert. Right now, obviously, we're still. I mean, this is still inverted for. I mean, this is months. This is. Let me see if I can get on the monthly. Okay, inverted here. Let's just get the ruler and see how many bars we got. 2 years. It's been 2 years that this has been inverted, so that's the longest in history. If something bad doesn't come of this, then everything we know is a lie. That's just all I can say at this point. But yeah, I mean, it ain't great. We can finish it with that. But I think that's pretty much it that we need to cover today. Tomorrow's going to be an interesting day. We got the end of the week. I don't think anything's really going to change in the markets. I think it's going to be either somewhat flat or it's going to be green. I don't think we're going to have any major sell-offs until after that June OPEX, if we do have any. Just seems like the markets right now are running on euphoria. And if that's the case, then it's kind of hard to stop that in its tracks unless something were to happen. But I don't think we're going to get any news, at least not in the trading hours, it appears. But
I hope not. I got a big weekend that I will not be able to be near my computer, or at least while I'm on it, not actively watching charts. I got a bunch of gaming going on, and then doing some farming, IRL farming, not virtual crypto yield farming. Gonna be plowing some fields, helping build a pontoon boat. It's gonna be a lot of touching grass for me. So I don't know if that qualifies for the vacation volatility meter, but yeah, hopefully we don't get too much movement while I'm away.
I don't think we are, but that sounds like an amazing weekend. Oh man, just get some sun, guys. It's the summertime. We're in the summer hours. It's the best time of the year to be enjoying yourself. These charts suck. We know the market sucks. I don't believe that we're safe from anything that's coming in terms of the economy. I think that even if there isn't a major pullback in the equity market, I do think that the consumer is going to be hurting here for a period of time. And you just kind of have to, survive at that point. But we'll leave it at that because we'll be back tomorrow. We'll talk about Roaring Kitty. We'll talk about how the markets are closing on the weekly. Unemployment, that's going to be the big one. But take care, everyone. We'll see you guys next time. And bye.